We also have the CFDs, or contract for difference. So the CFDs, or contract for differences, is a financial contract that pays the difference in settlement between the opening price and the closing price of the trade. So basically, CFDs represent equities. The CFDs were established as a means to mitigate risk for those who are trading the equity market or the shares market. So if you're trading a share, if you're buying a share as a share, the only way you get profit out of a share is if a share goes up, you get the capital gain, or if the respective company performs very well and you get dividends out of it. So when you invest in shares, that's how you make money. So for big investors, for companies like hedge funds, these fund managers firms, they take big trades in these shares. So how do they mitigate a risk when a share do not perform? So when a share does not perform, so you bought maybe a share at a current market price, maybe of $400, and it actually drops to $250. That's a loss of $150 per share. So for hedge fund, which has bought many shares, like millions of shares, it's a very big loss to them. So how do they mitigate this loss? That's where CFDs came into place. So we had this contract for difference that people enter. It's like a forward transaction. So they enter with the respective foreign exchange broker or a market maker. So the international banks, they enter into a contract that if this share drops to this price, if this share drops, then you would pay me for the price difference between the current market price and the future market price. So if it drops, they'll get a payment. And in order for that trade to hold, they have to pay a certain premium. And if it drops, then they get that payment, and that will be like a risk mitigation strategy, because in turn, they also have those shares that they bought in the actual stock market. So the CFDs, personally, I've never traded the CFDs. So it's usually, these are products that are usually used by the hedgers. So those who come into the market to hedge trades that they have taken in the stock market. So it's something that you need to learn about it and get to know more about it in order for you to take trades out of it.